Hello, beautiful people. Welcome to our segment today. I am your instructor, CPA Arengo Frederick. Today, Mwalimu is very excited. I know he's always very excited, but today, Mwalimu is very excited. He's excited because CPA results have been released, and our students, basically, they have literally performed very well. And these are some of the news that normally gives us a lot of excitement and, of course, push to always tend to give you all the best. So mentioning that, the semester is very short and therefore we just need to kickstart our semester immediately, right? So in our segment today, we are looking at financial reporting. And the concept of financial reporting that we are looking at today, basically, it is in relation to published financial statements. A very important concept that if at all we all have this, you'll find that passing examinations will always to be very easy. And our class today, I want us to handle a question that was done last sitting. Last sitting, literally, if you're watching this video today, last sitting, that is August 2023. A paper that was tested in relation to published financial statements. And this was a question number 5. This is question number 5. So I want us to approach that question. But before we look at that question, of course, it is always very ideal for us to basically look at the foundation, right? Published financial statements. I know, my good students, already, probably, if you've been watching Mwalimu all through, you must have seen questions and concepts of published that I've always shared in this channel, right? You must have seen questions for published that I've always shared in this channel. But today is special because Mwalimu is going to repeat the same concept again, and we handle a question in last sitting, right? So, published financial statements, remember, of course, this is all about presentation of financial statements, which is covered according to International Accounting Standards number 1. So, you'll find that anytime you talk of basically published, you'll find that it's all about presentation of our financial statements. And presentation of our financial statements, ideally, we are talking of, number 1, you should be able to present your statement of comprehensive income, statement of comprehensive income, which I know majority of you, basically, you know it as what? As income statement, right? Then, number 2, we must be able to present these statements, which ideally it is what we normally refer to as what? As statement of changes in equity. Statement of changes in equity, a very important concept that you must always be able to present. A statement of changes in equity literally just shows the movement of shareholders' funds within a particular period, right? Important item that you must also be able to present literally at this point, you must be able to present your statement of financial position. A very key element that you must always be able to have the format and as well present it. Other key item here, my good students, you'll find that though this one is covered as per under International Accounting Standard number 7, IAS number 7, this is a statement of cash flows. This one is covered, of course, in our International Accounting Standard number 7, cash flows, right? Then finally, at this point, whenever you're preparing your books, you must also be able to know how to give the notes. Literally, what do the notes do? The notes will tell us that you have used certain principles of accounting in preparing whatever that you prepared. So number 5, ideally here, we normally tend to talk about what? Notes to the accounts. So, generalizing all these items, these are now what will give us what? Published financial statements. That is what will give us what we're referring to as published financial statements. And key element that you must always be able to understand here, my good student, is very simple. The key element here is that in presenting of all these statements, basically, more so when you are talking about basically income statement, you should always be able to understand that all these items are literally prepared in a single format, one column. That is what Mwalimu is trying to say. So it is important for you to be very good with the format of presentation. Mwalimu is not going to redo the format again because we have done this before. Right? So this is what I want us to do. I want us to go through this question, which was attested basically in August 2023 question. I can also attach this question below this video so that you can all be able to have access to the same. I'm sharing this question with us here. You'll find that it's a very, very simple question that if at all you go through it clearly, you'll find that it will be very easy for you to handle it. I know now majority of you might be like, let me go through this video to the end to see where I messed up. Now, let us go through this question, right? I'm not going to say more on that. So these are what you are given. And the beauty part with the published financial statements is that the questions are always very straightforward and very easy to say. Just upon you to literally identify some key elements and concepts, you're just good to go. So going through this question, you're told that is question number 5. That is question number 5. You're told that the following balance relates to BD Limited as of 31st December 2022. And what are we given? We're given property at cost, which in this case, basically, I'm given a figure of 600,000, where building is literally valued at 400 million, right? Plant at cost, I'm given to 80. Motor vehicles at cost, I'm given the value there. The statement I'm given all through to suspense account. You can see the beauty part of this question is that a good examiner wanted to test us on the concept of suspense account. In that case, the question will be, my good students, do you remember the concept of suspense account that you did at your basic level? That's the question that we all need to answer. So looking at that key element, I know very well, it is always in our additional information. So let's go through our additional information and see what you have in here. Let's see what you have in here in our additional information. See what we have in here in our additional information. These are what you're having in additional information. Mwalimu has shared that question there with us. Additional information note number 1. These are what you're told. That during the year ended at 1st December, BD Limited disposed of an item of plant for cash proceeds of 20 million. Mark that very well. The cash proceeds was 20 million. And if you can recall the double entry of the cash, or rather on disposal, whenever you're receiving any cash, of course, on proceed, or rather on disposing your asset, you should know very well that the account to be debited, of course, is your bank or cash. The account to be credited, of course, is what? Your disposal account. Continuing with that, you're told that this was accredited to the revenue account, right? No other accounting entry was made, so you need to make that entry. The plant had cost 39.7 and had accumulated depreciation of 15,860 there. So literally, we'll have to determine if we had a profit or loss on disposal. That is very important to note. Any gain/loss on disposal of plant should be included in the cost of sales. A good examiner specified for us there. He has told us that at any given point, whenever I'm having a gain or loss on this disposal, it must be taken care of under cost of sales. Number 2, what are we told? Depreciation on property, plant, and equipment is to be provided and allocated as follows. So I'm given our assets where I'm told I'm having building, plant, motor vehicles, and office equipment. Rate per annum, the basis, as well as the allocation. Where are we going to allocate these costs? It has been discovered, that is note 3, it has been discovered that the former financial controller of BD Limited engaged in fraudulent financial reporting. 12 million of trade receivables are non-existent and need to be written off. This person was like, right, he didn't have ethics. And the question is, you as an accountant, suppose you're having a chance, will you put ethics aside and do your own things, or will you hold to the ethics, right? So this person literally had a value of 12 million, which he literally recorded them as trade receivables. But in reality, they were hot air, right? In reality, they were hot air. So you're told that Of the amount, 7 million relates to the year ended at 1st December 22, with the balance relating to prior periods. So literally, what are we going to concentrate on? First of all, there's going to be an impact which is going to affect all of our receivables. But again, the value that was written off relating to this year is what I'm going to take as what? As part of our cost, which is 7 million. You'll see how we are going to treat that. Note 4, we're told that the existing debit balance on the current tax in the trial balance represents the under provision for the previous year's tax. A provision for the current tax for the year ended at 1st December 2022 of 52 is required. So these are tax computation that you need to do, right? Together with a decrease to the deferred tax provision of 3 million. Okay. Inventory count on 31st December revealed the value of inventory at a cost of 85 million. So a good examiner is telling us here that, yes, I'm having this inventory, and this inventory basically was valued at 85 million. So we need to take care of that in computing our aspect of what? In computing literally our cost of sales. So note 6, you're told that on 30th December, the company directors invited the current shareholders to subscribe for rights issue, yeah, on the basis of 1 share for every 5 shares held at an exercise price of 15 each. The combined price on the last day of trading was 20 per share. So basically, you need to determine the additional premium that we'll be having, as well as the component of what? The ordinary shares that were added. The proceeds from the fully subscribed rights issue were credited to the suspense account. And that's why you can clearly see on top there, we had a suspense account of what? 60 million. Required. A good examiner here wants us to prepare number 1, statement of profit or loss for the year ended at 1st December. You're given 6 marks. Statement of changes in equity for the year ended at 1st December. You're given 4 marks. Statement of financial positions at 1st December. I'm given basically 10 marks. So, my good students, when you're given such a question, for the purpose of you understanding the whole concept clearly, you should understand that this is published, right? And on published financial statements, recall, this is what Molimo mentioned. This is what Molimo mentioned, that we'll be having all these elements, right? That we'll be having all these elements, like statement of comprehensive income, statement of changes in equity, statement of financial position, statement of cash flows as per IAS number 7, and notes to the accounts, which ideally we normally don't tend to deal with them mostly here in regard to the notes. So that will make our work even much easier, because these are what you need to do. Always, and this is an advice that Molimo is giving us, if possible, always apply this concept in every question that we'll be doing. Let us start by working out the additional information. If we work out our additional information, you'll find that whatever that will remain on the rest of whatever that we'll be doing, basically will be what? Will just be a matter of copying and pasting. Will just be a matter of copying and pasting. At the same time, for the purpose of exams, make sure that you're good with the format of presentation. Because once you're good with the format of presentation, majority of these items will always be just be a matter of what? Taking them, copying and pasting, right? So these are what I want us to do. This is what I want us to do. After going through that, we start with additional information number 1. Take this as part of our workings. Take this as part of our workings, right? So working number 1, we take in our additional information note 1, which you're given there. Let us go through that additional info together. What were we told? What were we told? We are told this, that during the year ended at 1st December, BDA Limited disposed of an item of plant for cash proceeds. So you need to determine here, my good students, this case. I need to determine if we had a gain or loss on disposal. So what am I going to do here? You can either open an account or you can do it directly the way it is. So long as you know the account to be debited and the account to be credited. So what happened here? Let us open these accounts very quickly for the purpose of us to understand the whole concept, right? I'm having an account of plant here very quickly. You're having an account of plant there, right? So what will happen? The plant that I'm having, basically, our figures here, we're told that balance broke down for plant, we had 280. So balance broke down, I'm having 280,000, my good students. Our figures, remember, are in thousands. What is happening? We need to, on disposing an asset, we need to debit the disposal account and we credit our asset account, which in this case, we are told that the cost, that is of course with the cost. If you can check, you're told that the cost of this item amounted to 39,700. So therefore, I'm going to debit our disposal account and credit our plant account disposal, which amounted to a figure of 39,700. That was the cost as per note number 1. You can be wondering, where is 280 coming from? 280, my good students, is coming here from our question, which, remember, you have it. You see this, what I was given. Check your plant at cost, just below property plant, just below property at cost. Plant at cost is 280. That's where Molimu has gotten that figure, right? Then, in this case, what are we told? I know very well I need to have these other accounts, like basically disposal account here. So what you are doing, my good students, what you are doing, I have basically credited our plant. So therefore, I need to debit our disposal account here. So you're having plant 39,700. This is a double entry, the one that you are all familiar with. The next transaction will be for us to consider the accumulated depreciation of the item that is being disposed. So what will be the next procedure? The next procedure will be to consider our accumulated depreciation account. So accumulated depreciation account. What will our accumulated depreciation accounts entail? Accumulated depreciation account number 1 will entail the balance brought down. Balance brought down. What was our balance brought down for this depreciation? The balance brought down for our depreciation, where we were given a figure of how much? Check our value there. That is accumulated depreciation for plant. You can see I'm given building is 80, plant is 111, 160, right? So that is what I'm going to take, 111, 160 there. So I'll be having here 111, 160. I'll be having here 111, 160, the value that you're having. So consider our depreciation that you are given in relation to this question. Note 1, we are told that the plant had cost 39 and had an accumulated depreciation of 15,860. So I'm going to take my disposal here. I have it as 15,860. So 15,860, which literally I'm going to debit our account here, or rather credit our disposal account with basically accumulated depreciation, the value that I'm having, 15,860. Double entry, right? The next item is to record proceeds on disposal. How much did you receive when you are disposing this asset? We are told that we received a value of how much? We received 20 million. So 20 million, literally, what are we going to do? I'm going to have here our bank. So debit our bank or cash with 20 million and we credit our disposal account with the same value. So as at the end of the day, whatever that I'll be having here now, my good student, is, if I told you to close this, what will you be having? First of all, on my plant, what will I be having in my plant? I'm having balance carried down, because in our notes, we've not seen anywhere where we had another effect in relation to that. Unless it appears, of course, we'll be able to treat it accordingly. So on that case, I should be having my balance carried down to be 280 minus 39,700, which will give us a value of how much? I'm getting to 4,300. So confidently, I'm going to take here to 4,300. Where is my blue pen? I'm going to take here to 40300. So to 40300, that's the value that I'll be having there as a balance carried down. What about for disposal? Did you have a loss or did you have a profit on disposal? For disposal, what will you be having here? I'm having 15,860 plus 20,000, that is 35,860, and the plant we had, the cost was this. Whatever that I achieved on disposing my asset is a total of this, which is 35,860. So that is to say, I'm going to debit our P&L, which is a loss. A loss of how much? A loss of 39,700 minus answer here should give us 3840. So my good students, mark these values. Mark that value, 3840. That is a loss. And we are told in that note that it is the company's policy to provide full year's depreciation. Before that, we are told that any gain / loss on disposal of plant should be included within the cost of sales. So that's why this amount, we are going to include it in our cost of sales. Mark that very well. What about our depreciation? Depreciation, therefore, how are we going to compute it? I need to determine my P&L, the value that is going to be taken as depreciation for that current year. How are we going to go about it? That will be very easy, because what were we told? How are we supposed to provide depreciation for that asset? If you can check in note number 2, a good examiner is very clear, and a good examiner here has told us that plant, or we are providing depreciation on plant at the rate of 10%, right? Reducing balance basis, reducing balance basis. So how will you go about it? On reducing balance basis, this is a question that I'm going to ask myself, is as at the end of this period, we had the value of 240,300, right? We had a value of 340 to 4,300. What was the accumulated depreciation as at the beginning of that period? The accumulated depreciation as at the beginning of that period, we were having 111,160. But remember, we removed this asset, which had accumulated depreciation of 15,860 minus 15,860. So we can all agree and say that as at the beginning of the period, excluding the asset that we disposed, we can comfortably say that our balance for accumulated depreciation was 95,300. So what are we going to do? We are going to take to 4,300 minus my value there of whatever value that we've gotten in 5,300 to give me 145,000. So 145, this is the book value as at the beginning of the period. What is our depreciation? Depreciation we are given at the rate of 10%. So times 10%, which will give us a figure of how much? 14,500 here. So I'm going to take 14,500 as our depreciation for that period. Depreciation for that period. Because we're taking it to 4,300, of course, we have deducted the value, which is 95,300. Taking 111,160 minus 15,860. So having that, can you now determine our balance carried down? Balance carried down for this period, we can determine it easily now by taking 111,160 plus 14,500 minus 15,860, which will literally give us 109,800. So that this will be our accumulated depreciation by the time we are having everything by the time we are having everything as at the end of that year. So literally, that is to say, we are through with that note, dissecting it into a deeper perspective. Going through the other note, it is a company's policy to provide full year's depreciation in the year of asset and none in the year of disposal. What we've just done right now, what we've literally done right now. The second step will be, my good students, the second step will be note 2. Depreciation on property, plant, and equipment is to be provided and allocated as follows. So therefore, in this case, whatever that we can literally do or prepare is what we can have it, or what we normally tend to say. We normally tend to prepare what is known as what? The aspect of cost classification schedule, right? Or you can just do it directly. You can just do it directly in terms of our cost classification schedule. So let us have here our cost classification schedule. Cost classification schedule. Cost classification schedule. We can do it very quickly. We can do it very quickly. Because remember, what we should be having in published, what we should be having at the back of our mind, anytime you're handling published. Remember, this cost will be reported as form of one cost, like if it is a cost of sales, if it is admin expenses. Depreciation won't be taken as depreciation separately, but it has to be kind of considered under a certain umbrella, which can either be administrative, selling and distribution, or cost of sales, right? So mentioning that, let us see what you are given here. Whatever that you are given here, we start with whatever that was reported. Whatever that was reported, were we given our cost of sales somewhere? We weren't given our cost of sales, so therefore we need to determine our cost of sales. But we can consider that literally the way it is. We can literally consider whatever that you're given directly there. We can consider whatever that was given directly there. So how will we go about it? How will we go about it? We are given, of course, our revenue. We are given basically our cost of sales. I think you are given on top there. Let me share this so that you can all have it. Check this one out. Check whatever that you're having this question here. You can see all these are the items that you're literally given. The items that you're given there, which in this case we had our items given there, including our depreciations and the other items that you are given there. So I'm having distribution cost. Are you seeing distribution? Can you see admin? Can see distribution cost. I'm having the administrative cost. I'm having our revenue, which I'm given there, trade receivables and trade payables, bank balance, deferred tax, current tax. I'm given all these items. So whatever that you are going to do here, that will be simple. We start with our cost of sales. Cost of sales, that will be easy. I'm just taking the figures that you are given, my good students, there, right? So you're having cost of sales. Let us mention this as our cost of sales. These are literally the guiding values that we'll be using. We have the other item. I can see I'm having distribution cost. So I'm having distribution cost here. Distribution cost. The other value that you're talking about here, I'm having what? I'm having administrative expenses. We're having admin expenses. What else? What else am I given there? I'm having basically deferred admin. I can see I'm having bank interest, which is our finance cost, right? So we're having our finance cost. We're having our finance cost. So this is admin expense. Then we're having our finance cost. So we note them down. We note them down like that. Admin costs, finance costs. So once I have this schedule, this will literally help us to prepare our work very easily. This is what I'm having. Let me remove this question on the page so that you can literally see it clearly. This is what you're having here, right? This is what you're having here. Remember, I'm going the long route so that you can be able to understand it. If I told you to use the shortcut, the concept will not sink clearly. But if you're able to understand the whole bit so that you can, when you are doing it with a shortcut, things will be very, very easy, right? So this is what we have, my good students. We start by considering our balance breakdown, right? Or reported. What was reported here? In our cost of sales, basically you can determine our cost of sales very easily. Actually, I want us to use our calculator. I want us to use our calculator to determine that cost of sales directly. By now, you know cost of sales, you normally tend to talk of what? Opening inventory. Opening inventory, are you given? Yes, you are given. Opening inventory, you are given 138,000. You add what? Your purchases. Were you given your purchases? You're given our purchases just below opening inventory of 667, right? You less your closing inventory. Your closing inventory, my good students, remember we had looked at it here. According to our analysis, we were told closing inventory amounted to how much? 85. So minus 85. So I'm having a figure of how much? 720. Just follow that procedure the Mwalimu was done. You take your opening inventory, you add your purchases, you less your closing inventory. Mwalimu is getting 720,000 there. As simple as it is, right? As simple as it is. The next item to consider will be what? Consider the balances that were given for the other items. Distribution, admin, and finance cost. I want us to do that very quickly. So in this case, this is what I'll be having. You just take the values the way we were given. For distribution cost, you can see I was given a value of how much there. I was given a value of my paper is telling me I'm having 44,000, right? So I'm having 44,000 here. What about admin cost? Admin cost, my paper is telling me I had 93,500. 93,500. What about finance cost? My paper is telling me that finance cost here, I can see bank interest, I'm having 2,400. So literally, we are copying and pasting the way it is. Literally, we are copying and pasting the way it is. So after that bit, let us now, my good students, dissect these other components that you are given. Starting with what? Let us dissect these other components. I literally want to have this question with us so that we work it out as you're seeing it. We are given, number one, look at the buildings. What are we told in relation to the buildings? The buildings here, our good examiner is telling us that note 2, depreciation was to be taken to administrative expenses, right? So I'm going to have, this is depreciation. We're having for building, making our work much easier. Take it to distribution, or rather take it to admin. So that was on a straight line basis. On top there, we can see that our building cost amounted to what? 400. Whatever that was given. So I'm having 400,000 times 10%, literally. That should give us a value of, that should give us, of course, I'm having I've taken basically property. So on our property, we are told building, I'm having 400, and well, I'm having the balance of the total 600, but depreciation was given 2.5. So you're taking the 2.5, 0.025 times the cost of the building, which was 400, which will give us a value of how much? I'm getting 10,000, my good students. So take 25% times the cost of the building, which you're given on top there in the first page, 400,000. So this should give us how much? This should give us a 10,000, right? This should give us 10,000. That is under distribution. That is how we're told under administrative, 10,000 under administrative expense. So we start with that bit. The next item in plant, which you are told, plant, you're going to take it under cost of sales. So for plant, number one, we have realized that depreciation for plant during that period is 14.5. Remember the one that we had computed, right? This is what Molimu is talking about. We had already computed that. We had already computed that. This one, this value here, 14,500. So I'm going to take it here, 14,500. Very good. The next item to consider was motor vehicles, which you are given depreciation of 20%. So I'm having motor vehicle. So this is a 10 was a building, right? 14.5. 14.5, let us have it here clearly. 14.5 was plant. 14.5 is plant, which is under cost of sales. Whereas motor vehicle was given under distribution. So motor vehicle here, what will you be having? Motor vehicle, straight line basis. The value of motor vehicle on top there, we are told that the motor vehicle costed us 70 million. So I'll be having my 70 million times 20%, which will give us 14,000. Molimu is getting 14,000. So that is distribution. Motor vehicle, I'm getting 14,000. Very confidently, I'll be having my 14,000 there. What else did we have? Office equipment, 12%. Straight line, that is administrative. So office equipment, straight line, administrative, and that will be a value of how much? Office equipment, we are given 70,000. So I'll be having my 70. That is the office equipment, that is 40 times 12%, 12.5%, so 0.125. So that should give us a value of 5,000. Molimu is getting a value of 5,000. So I'll be having my 5,000 here. So we're having for depreciation items. So literally, we are done with that bit. And I want us to go back in note 1, where we are told that, look at this note 1. Remember, I want to share with us so that whatever that Molimu is giving, we should also be able to see it clearly here. If you can check note 1, a good examiner had mentioned to us that any gain or loss on disposal of plants should be included within cost of sales. Just check that note 1. And here, according to our computation, we realize that we had what? A loss on disposal. Loss on disposal, which you are going to take it in note 1, and therefore we take it under cost of sales, a value of 3840, because that is what you had computed. 3840, cost of sales. Another item to be considered, of course, under cost of sales is what? We aren't given any other item. We weren't given any other item. So after that point, I'm not seeing any other item that will affect us, except for note number. That was a note number. This is an item that will have note number 6. Look at note number 6, guys. What were we told in relation to note number 6? What were we told in relation to basically note number 6? Note number 6, we are told that on 30th December, the company directors invited, that is a note number where we saw that the financial controller was, he didn't kind of adhere to the ethics, right? Which was note number 3, sorry. It has been discovered that the former financial controller of BD Limited, engaged in fraudulent financial reporting. 12 million of trade receivables are non-existent and need to be written off. Of this amount, 7 million relates to the year ended at 1st December with a balance relating to the prior periods. So remember, of course, on the accrual concept, or rather basically on the matching concept, we should match these expenses with the year that they were incurred. So like these bad debts, the one that related to this current year was a value of 7,000. So the question will be, where are we going to set this 7,000? In which component of cost? Remember, you can either set it in either cost of sales, distribution cost, admin cost, and finance cost, whichever that you deem fit. But in this case, looking at this now, whatever that we would written as bad debts, right? Between cost of sales, distribution cost, admin cost, ideally, where are you going to place it? You can place it either under cost of sales or distribution cost, because the examiner didn't specify where we are supposed to place it, right? We weren't told where we're supposed to place it. So at this point, you can place it on either of the item, which on this end, for me, you can place it on the cost of sales, because basically this is related to the item that you're having, right? Receivables, which are part of inventories, right? So basically, I'm having 7,000 there. So that as at the end of the day, if at all you are to count our items to be treated, which our work will just be copying and pasting now, henceforth, I'll be taking these values. For cost of sales, I'm literally going to adjust all this. We adjust, we adjust, we adjust, which will be very simple. We start with the first one, cost of sales. I'm having 720,000. We add 14,500. We add 3840. We add 7,000. So this will give us a value of how much? I'm getting 745,340. I'm getting 745,340 here. 745,340. You'll mark these figures for Mwalimu. Distribution cost, I'm having 44,000 plus 14,000, which will give us 58,000. Admin cost, 93,500 plus 10,000 plus 5,000, which will give us 108,500. I believe you guys are getting the same values with Mwalimu. Literally, I can remove this so that you can all see it. Then finance cost, I'm having 2,400 there. So these are the values that we just be copying and pasting now in our books directly. These are the values that we just be copying and pasting directly in our books. So whichever statement that I'm left with there, basically I need to count for, so we are done with note number 2. Note number 3, we are literally done with it. Then come to the component of tax. That is note 4. So kindly mark for Mwalimu these items. You can just put it in somewhere, so that at least we should not be able to ruin our items on our end. Mwalimu is just going to take a photo of that so that we have it right. The next item, what will we be having? Allow me to erase these workings, because literally we are done with this bit, right? So the next working to consider, I want us to jump to note number, first of all, note 3, which has affected us here. The value of 12 million will affect our trade receivables directly. So let's jump to note 4. The existing debit balance on the current tax in the trial balance represents the under and over provision for previous year's tax. A provision for the current tax for the year ended at 1st December 2022 of 52 is required, together with a decrease to the deferred tax provision of 3 million. So let us handle that, my good students, quickly here, so that whatever tax that remain, our work will just be a matter of copying and pasting. I believe that you have all this. So talk of our tax here. Our tax, this is what our good examiner is telling us, that we having basically the provision of whatever that you need to pay. So let me have this question here with us so that we can be able to view it and be on the same page with Mwalimu. Mwalimu is reading note number 4. Mwalimu is reading note number 4. Note 4 is telling us that the existing debit balance on the current tax in the trial balance, which ideally this is what you are having. Check your trial balance, the current tax, the 2,600. That is what Mwalimu is telling. That is what basically examiner is telling us. That balance, we are told that the existing debit balance of the current tax in the trial balance represents the under or over provision for the previous year's tax. A provision for current tax for the year ended at 1st December 22 or 52 is required together. So provision for current tax this year, provision for tax this year, we are given a value of 52 million. Which our case of figures are in thousands. So I'm going to take it as 52,000. We had the under provision for last period. The under provision for last period, my good students, you are given what? 2,600 as per what you've seen, right? Under provision for the previous period, we are given 2,600. So we need to add. Then on the same statement, our good examiner is telling us that together with a decrease to the deferred tax provision of 3,000. So decrease on deferred tax, right? Deferred tax, which ideally is 3,000. So we need to do what? We need to deduct that. So if we were to measure our tax component, therefore, our tax therefore will be a value of how much? Our tax, my good students, that will be simple. I should be talking of 52,000 plus 2,600 minus 3,000. So provision for current tax this year, they want to be recorded. I should be talking of 51,600 there. As simple as that. As simple as that. As simple as that. So once we are done with that, proceed to the next note. Note 5, that one is direct. Note 6, on 30th December, the company directors invited the current shareholders to subscribe for rights issue on the basis of 1 share for every 5 shares held at an exercise price of 15 shillings each. So the rights price on the last day of trading was 20 per share. The proceeds from the fully subscribed rights issue were credited to the suspense account. And that's why our good examiner gave us our suspense account, right? Remember this suspense account that you're given here? Look at this. Look at the suspense account. Suspense account, you're given a value of 60, right? So this will be very easy because literally I'm going to take, of course, my value here, suspense account. We need to write off that suspense account. My suspense account here, I should be having whatever that was reported was 60,000, right? What happened to that? There was this issue whereby we are told that on 30th December, the company directors invited the current shareholders to subscribe for a rights issue on the basis of 1 share for every 5. 1 share for every 5, 1 over 5, times how many shares did we have? The number of shares that you're given, the value of shares according to our books. Look at this case. The value of ordinary shares, we were given 200 million, which in this case is 200,000. And each share was going for 10 shillings per value. So that is to say, the number of shares that you'll be having basically is 200,000 divided by 10, which will literally give us what? 20,000 shares. These are the number of shares, right? Times the per value was 10, which will give us how much? 40,000, right? But we were issuing this, exercise price was 15. meaning that we had a premium of 5 shillings. So therefore, 1 over 5 times 20,000 times premium of 5, this should give us basically 20,000, right? So I'm having basically a value of 60. So that in this case, I'll be having basically ordinary shares issue, right, of 20, or rather of 40,000, where we have credited our ordinary shares. I'm also going to credit our share premium, the one for 5. So share premium, I'll be having, of course, a value of 20,000. So that as at the end of the day, this suspense account will have been cleared. So I know very well that when I'll be preparing my books, this is what will happen. I'm going to increase my ordinary shares by 40, and we're also going to increase our share premium by 20. So once you are done this, actually we've gone through all the work. Now our task will just be a matter of copying and pasting. That is what now will remain. That's the beauty part with basically published. Once you're having all your items right, the next task will just be a matter of us copying and pasting. So that was our working. Let us see. Copy and paste now very quickly. Allow me to erase now everything here, because we have it as we wanted. So the name of the firm, always very good to start with the title, which I'm having BD Limited. Income statement, so I'll be having here BD Limited income statement, of course, for the year ended. I know you had all this. So literally, I can erase, or let me see, for income statement. If it will fit here, then that would be very okay. Income statement for the year ended. For the year ended 31st December 2022. So task will just be a matter of copying and pasting. Remember, our values basically are in thousands. So we start with our revenue. What are we given as our revenue? Let us just copy and paste the figures. Our revenue, we are given our value of our revenue to be how much? Let me share that. Look at our revenue. Our revenue, according to what I was given, basically, we had a value of, that is, look at our revenue, what we given. Revenue, I can see we had 1,123,500. 1,123,500. But out of that, there was this amount in note 1 where we are told that the cash proceeds of 20, which were credited to the revenue account. So literally you must remove that, because we had conducted, or rather we have corrected that and do it the way it's supposed to be done. So we need to deduct that. So I'll be having 1 million here, 1,123,500 minus 20 million to give us 1,103,500. 1,103,500. 1,103,500. Cost of sales. Quickly copy and paste. We have it here, 745, 340. So minus 745, 340, 358, 160. We have our expenses, which we are going to start with admin distribution cost. Distribution cost, we had a figure of 58,000. You copy and paste. Admin cost, we had a figure of how much for admin cost? 108,500. Finance cost, I'm having a value of 2,400. So that as at the end of the day, this is what you are going to deduct to give us a value of minus 58,000 minus 108,500 minus 2.4 to give us a value of 189,260. Right? I'm having basically a value of 189,260. 189,260. We less our tax, the corporation tax that we have computed, my good student, was how much? Remember, we've already computed our corporation tax, and we got a figure of that was 51,600, right? 51,600. 51,600. So this is the corporation tax that we had computed. So minus 51,600, that will literally give us a value of 137,660. 137,660. That is what Mwalimu is determining. I hope with the same value that you guys you're getting. Up to that point, make sure that you're on the same page. Up to that point, make sure you're on the same page. So this will be the profit for the year. Profit for the year. Profit for the year. Profit for the year. With that, we are done with our income statement. As simple as that. We are done with our income statement. We are done with our income statement. We proceed in preparing our statement of changes